How's everybody doing? Thank you, Jenna. Appreciate it.
Good.
Thanks, Dave. PJ, welcome back. Glad you're back safe. Glad you didn't get hurt.
No injuries this time.
Good, good. All right, gang. Yeah, so we've had a couple of weird weeks with some weather, so we're gonna thank God we're back kind of in the flow of this call because this is one of my favorites. But here's what I want to do. I just want to open it up with some gratitude, something exciting, something maybe you want to share. The floor is yours. What would you like to share with us? Nobody has anything?
Just happy for the weather distractions to be gone.
Yeah, thank you, Sharon. Thank you. I appreciate that one. Now, if we just can bring a little warmth into the equation, I think we'll all be happy. Yep. Let's get one more. Something of gratitude, something you want to share, something exciting. Could be business, can be personal.
I've got
Whatever you-
something. It's Joanne
Yeah,
Snyder. Good morning,
Hi.
everybody. Since
Good
Teresa
morning.
Green is on the call, I want to give her a shout out. She's amazing on a closing I had. I think it was, gosh, like 22, 25 days from when she got my contract to close, and it not a single problem. So she's amazing. Thanks,
That
Teresa.
is awesome.
Yeah, she's
Thank
amazing.
you.
Thanks, Teresa.
Yeah, well, I'll give a shout out too. I had 4 new agents sending me pre-quals deals this weekend. So yay, the market is turning on.
We love it. Love to hear all that activity. That is fantastic. And thanks for all that you do to help everybody, Teresa.
Absolutely my pleasure. Keep them coming.
All right. So guys, here's what we're going to do. I'm going to start off, since it's been a couple of weeks, kind of refire our brains into this whole Monday morning numbers kind of conversation. I'm going to give you a test. I know you're super excited about that, but I'm going to it's actually a quiz. It's not really a full-blown test. But here's the first question. How's the market in terms of how it started this year? So we've got one full completed month under our belts. We had the weather we had. It's January. It's all those things. How is the market? Is the market good? Is the market active? Is the market busy? Is the market dead? Is the market quiet? Is nobody buying or nobody listing? What's happening? This is your job as professionals in real estate to know these answers, right? That's why we do these calls. So how's the market? Somebody asked you that question today. How would you respond?
Why do you ask?
I ask because I want to know, man.
Well, it's unbelievable.
Okay. Market's unbelievable.
Are
Anybody
you looking
else?
to do something in the real estate world right now? Are you looking to buy? Are you looking to sell? Are you looking to invest? What's your motivation for your question?
Yeah, right. Some that could be a great follow-up question, right? Then the market has some amazing opportunities. What is it? Do you have any goals? What are you trying to accomplish? What if somebody asked you the question more specifically? Gosh, everything I'm seeing or reading is that the market's kind of quiet right now. I think I should wait to X. I should wait to buy. I should wait to list. I should wait to whatever. How would you respond?
That's why we need to meet. I'm not sure what you're looking at, and I respect what sources you get, but let me be your local expert. You know, the market's very healthy and we have different pockets of the market. Some days are longer, some days are shorter, but let's sit down and develop a strategy plan so we can see how we can meet your needs.
Okay, love that one. Make it about them. What would you share specifically about market data and market information about the month of January? See, guys, sometimes what we do is we're going to interpret the market based on our interaction or our activity level within the market. If we don't have appointments with buyers or sellers, or we're not having conversations with motivated people who need to transact real estate or have a strong desire to do so, we may feel that the market's kind of quiet. Yeah, we could also see a lot that, man, it's been busier than it's been in the last couple of years. With leads, with opportunities, phone calls, listing appointments, buyer consults, all of it. And we might think, man, the market is heated up. That's what we're experiencing.
You can say to your buyers or the potential buyers that my buyers are always looking for a good opportunity for investment people. And then if they actually are buying, they're always looking not to miss what's out there. And then on the seller side is you want to think about getting ahead of the market a little bit.
Okay, yeah, love that. Let's kind of explore it and get ahead of it. All right, so here's what I want to do, guys. I want to do this real quick. I want to hit share. And I hope you are all seeing this thing called the real estate trend indicator on your screen. If you have your screen on. So here's what I asked for this morning. I pulled this report. I wanted residential properties for the month of January, and I asked for activity level in Mecklenburg, Union, York, Lancaster, Gaston counties. So residential, those 5 counties, month of January. 1-page report, you know me, fan of 1-pagers, right? Get a lot of information out of it. You guys have seen this before. So this breaks sold listings down into different categories such as bedroom count and then price points. So here we go. Let's kind of scroll down because how is the market performing? Well, in the month of January, those counties in the residential category, we closed 1,510 units worth close to $806 actually $million in closed volume with an average price of $533,811. That was the average price. Month of January, those were our closings. Month of January, we put under contract 1,976 homes with an average price of $531,500, worth over $1 billion. So in 2 categories, and what we closed and what we put out for pending, just in the month of January, our activity volume is $1.8 billion in activity in the month of January. And if I include the units, we're close to 3,500 units, so right around 3,500 units. So now if I ask you the question, how's the market? Is the market off to a good start?
Yep.
Month of January, we had snow events, we had winter weather, we had cold weather. It's January, right? We had all the things that we, the headwinds we fly into in the month of January. And yet, let's look at what we did in a 5-county area. 3,500 units, 1.8 billion in volume in 2 categories. What we put under contract and what we closed. All right, so let's dig in a little bit more. Out of the closed units, those 1,510 closed units, what percentage of those would you say were on the market 0 to 30 days?
$68.
What was it, Dave?
I said 68.
68% were on the market 0 to 30 days. Anybody else?
30%.
30%. Okay, so we got a 30, we got a 68. Let's get one more.
45.
The actual retail price, no, I'm kidding. So here we go. It was 40% of homes that closed in January were on the market in the 0 to 30-day category. I'll scroll down so you can see it. Well, I'm giving up the next category here. The 31 to 60 days, we had 264 units. That equated to 17.5%. So just those two categories that closed in January, we had what, 871 units, which represented about 58% of the closings were on the market 60 days or less. We had another 222 units that were on 61 to 90 days. That was about 15%. So all told, those three categories, about 3 out of 4 homes that closed in January were on the market less than 90 days. All right, I'm going to keep going with a lot more information in this report. This is why I like this one. If I scroll down further, well, you can kind of see it here. It says cash purchases. 292 units of the 1,510 units were paid for with cash. That represented about 19%, or roughly about 1 out of 5 homes were paid for with cash. In terms of conventional financing, 925 units of the 1,510, that was about 61%, or about 2 out of 3. And then we had FHA rolling out here at number 3. We had 162 units for FHA. That was about 11%, or about 1 out of 10. So those are your top 3 ways that homes were paid for in the month of January of the 1,500 units we closed in that 5-county area. I mean, that accounted for 80. That's 90, about 90%. 9 out of 10 were paid for one of those 3 ways. There's a bunch of others I have in the category. VA is number 4 at 81 units, so that would be about what, 5% roughly, 5 to 6%. That came out at number 4. But if you actually have your screen on and you're looking at this, you can see all the other categories they have here as well. All right. So now I want to go back to the cash for a minute. That 19%, 1 out of 5. Does that sound like a high amount, low amount, average amount? What do you think with that one? Do you guys track that data or that number at all in our market?
It's lower than I've seen. I mean, my numbers might be like monthly or quarterly, but it seems to be lower. I think at one time, Charlotte market, we were 33%, 28%. So it seems to be a little lower.
So what I do, and thank you for that, Sharon. As you know, I look at this report all the time. Like I'm talking years. I've watched this report. Typically what I do is I might look at this from a perspective of like an 8-county area, which tends to be Mecklenburg County and surrounding. I only pulled up the 5 today to kind of keep it focused on our primary area down here. But a lot of times when I'm looking at all 8 counties, historically, that percentage of cash purchases hovers around 18 to 19%. So we've been seeing about 1 out of 5 deals pretty much stay at cash. Now, I want to talk why I'm bringing this one up. What is one of the more recent things we've heard that the government might want to try to implement as it relates to investors and real estate purchases?
Eliminating the what do you call it, the big box companies and REITs from purchasing?
Yeah, the institutional investors, preventing them from buying single family resale homes so that consumers, owner occupants, would have the opportunity, right? So don't absorb the inventory, save it for the people who are going to live in them who want to purchase a single family home. So now that we kind of see that as a regulation, and I just shared a statistic with you around this, is that going to be something that would impact our market in a way that could benefit consumers? 1 out of 5, 20%, less than 20%. Personally, I don't think that's an impact. Here's why. I'm not saying that every one of those 1 out of 5 purchases that are cash purchases are investors. Don't forget, we're a market where a lot of people are moving to Charlotte from other locations. And sometimes, excuse me, those locations that they're moving from can be higher price locations, or the people have sat, they've been in their homes for a long time and they've acquired a lot of equity. And they're bringing that equity here when they purchase. And they go, you know what? I netted 700 grand on my house and wherever. I can come down here, and if the average price in Charlotte's running at 534, or heck, even if you look at the average price on a 4-bedroom at 750, I might be able to pay cash for the house and not worry about the interest rates. The one thing this report doesn't break out, we could go in and do the research on it. I just haven't done it. To see out of the cash purchases, how many of those potentially were not owner-occupied purchases? Even if I said half of them maybe were investors and the other half were owner-occupants. Okay, now we're talking about 1 out of 10 deals are investors, so 10% of the market potentially is going to maybe the institutional investors. So I don't know if a rule like that would impact our market in a way that would make it a positive. So again, our job is to take information, understand it in a way that we could interpret it, how that's going to be an impact to potential consumers, because everybody's going to have an idea, a thought, an opinion, or other information they have gathered to determine whether or not that's going to be a good thing or a bad thing. All right, so that's my 2 cents on that. Anybody have anything else you want to share around the cash purchases or how these properties were paid for? Okay, we'll keep rolling. So we set up here 1,510 units closed, 1,976 units went pending in the month of January. We still showed, by the time we got to the end of January, 6,270 units. I'm sorry, 6,207 active units. Now, some of those could be on the market. They didn't fall into the category of they went under contract or they closed. So they could have been on the market even longer. And as part of that January number, or they could be new listings coming on the market in January. We had 259 units that expired. We had 461 units that were withdrawn or off market. Could be temporarily off market as well, but we'll just call these withdrawals for now. So here's what I want you to look at next. Look at the average price of the expires, $549. What was the average price of the closed? $534. What was the average price of the pendings? $532. Is there a huge gap between the expired price and the pending or closed price?
Yes, there is.
Okay.
Yeah, they're overpriced. That's probably why they didn't sell.
Could be. I mean, we're talking, if we just compared it to the closed price, I mean, we're talking a difference of about $16,000. Yeah, that could be part of it. Here's the one thing I do want you to understand in the expireds, or at least in this data report. This does not tell us anything about price reductions. This is the price they expired at. So they could have started higher. They could have had some price reductions along the way. Hard to say. Again, we could look at that information. I could pull, very specific data just around expires and kind of get to that. But we're kind of looking at this as an overall view of the market with this report. This man is giving us a lot of talking points already. All right, but now let's look at that average price for the withdrawals. $643 compared to $533,000 on the sold. That's a gap of $110,000 in average price. I want you to think about that number. Any ahas come up in that one at all, or any opportunities pop up in that one? $461 units withdrew, 259 units expired. The average expired price $549, the average withdrawn price $643. Ahas or opportunities?
Well, I think that average sales price being at 549 or whatever it was, the median sales price in Charlotte for the month of January was 400,000. And I think we're all still feeling a little bit of the COVID hangover in price points. And so I think it's overpriced listings, seasonality, time of year, which I hate that plays a factor into that.
Sure.
Yet I think that it's just the market's finally starting to level out after, you know, the crazy inflation of prices that we saw during COVID. So I don't know. That's my guess.
Well, yeah, I mean, but you're onto something, PJ, because this is how we have to kind of look at it for a second. This is what I want everybody to see. We're tough. So let's look at the close. Let's go back to closed units. 1,510 units closed in the month of January. Okay, so there could be a handful that went under contract in January, but typically when were those properties, when were they put under contract? December. Could be some Novembers in there. There could have been some Januaries in there, but the bulk of those closings went under contract in December. Okay. We put under contract 1,976 units. PJ used one word that gives us a clue in this: seasonality. We didn't have the best weather in January, did we? At least at month end. And yet, because even with seasonality and colder weather and all the things, we still had a lot of real estate activity happening in a month that we typically look at as one of the lower seasonal months that we deal with in our market. And then if I go back to the closed units, 1,510, remember 40% of them were on the market less than 30 days. How important is price?
Very.
Right. So guys, this could even be a sheet that you go, hey, you know what? I know you're thinking about maybe trying your list price a little bit higher. Let me kind of show you what happened or what's been happening here over the last 30, 60 days. There were almost 500 sellers that decided to take their home off the market, and their average price was over $100,000 more than the average close price. The expireds, we didn't have as many. They still were a little bit higher on the average compared to the closed. The gap wasn't as big as it was with the ones who voluntarily took their home off the market before the listing agreement expired. These are the folks that probably made an attempt to at least do some price adjustments along the way, but they were still high, weren't they? So as a seller, I wanted you to see this, because it's really important that we get it right. Because when you do, you can be down here in the 40% category of properties that even in a cold month, in a slower market month, what we call seasonality, you can still be one of the 40% of sellers who can be on the market less than 30 days. Guys, this is one page. One page, yeah, there's a lot of categories in here, but look at all the things, the talking points, the things that we can share with people that explain how the market is performing. This is talking points alone of knowing how many units we close and what that value of those. You know, we closed $800 million worth of properties, residential properties, in the month of January. To the average person, we might say that too, or answer their question, how is the market? 800 million sounds like a massive amount of volume, doesn't it? Yeah. Why? Because it is. And by the way, not only did we close that much in January, we put under contract over $1 billion in the month of January. 1 billion. How's the market? The market can be great for sellers, and apparently the market can be really great for buyers too. Because that's what it's already showing up in our local market in the month of January. All right, gang, so this is called the Real Estate Trend Indicator. You have the opportunity to get to it. Let me go back here and I can show you. Here's the page. Again, if you're on your screen, you go over here where it says more at the end, go to market reports. Real Estate Trend Indicator pops up as one of your options. Really simple. You can put in your start dates, end date, property type, property subtype. You can break it down by subdivision, city. You can put counties in here. You can put postal codes. You can put whatever you want, and you click generate report. When you do that, you get the report we've been looking at. All right. Anybody have any thoughts, comments, questions, ahas?
Jeff, I want to throw one more thing in there.
Sure, please do, PJ.
You know the weekly, monthly reports that you taught us to read years ago, and
Yeah.
our team still reads them every week.
Yeah.
Something else that I would just throw in with this is for the month of December, when you're looking at that quick little bullet point, the percentage of original list price to price received was 94.2%. And in November, it went below 95% for the first time, and it only goes back to the beginning of 2024. But I'm pretty sure in 23 and 22, we haven't seen percentages that low. And so when we talk about seasonality, when we talk about homes being priced too high, all of these things, we need to have those intelligent conversations with the sellers that they may be having to make more concessions when it comes to receiving an offer. And on the flip side of that coin, we don't want to get the buyers too overzealous, yet a lot of times in the past couple of years, we would say, you know what, don't make an insulting offer. Don't go too low. And I think that time is over now. Not that we're going to offer, $400,000 on a $500,000 house or something like that. Yet I think we can be more aggressive on the offers as well at this point.
Yeah, there's still a lot inside of it. Thank you for sharing that, PJ. There's still a lot that you just shared off of that other report that can be great talking points for us, because as you're saying it, I'm going, well, okay, I compare my average days on market to the average days on market of the properties we look at. I could look at my sale price to list price ratio, and am I outpacing the market? So list with me, because I can get you 2 percentage points more. The power of doing a CMA is saying, do we have the home price for buyer and seller side? Do we have the home price correctly, or is the home price right where it should be? So it's going to be one of those properties that go under contract in 0 to 30 days. So maybe you can't be as aggressive in what you're asking because of the sellers. It looks like they kind of got the price right where they're supposed to be. They're probably going to get the right activity, right? So all of this data can even go deeper level of what we talked about today and what PJ just shared, for us to be able to really go in and consult people at the highest level. And that shows your professionalism of helping them prepare best for the market and set expectations. All right, gang, appreciate everybody being on this morning. Hate to do this. We won't have this call next Monday because I'll be on vacation. So anyways, we'll pick it back up the following week, and I appreciate everybody being on. Make it a great week. And as always, anything I can do, let me know. Talk to everybody.
Enjoy your vacation.
Have
Thank you.
fun in your vacation.
Thank you.
Thank